In this video, I'm going to show you one of the simplest entry frameworks that you can use in 2026. Once you see it, trading just becomes effortless. Just look at my latest live funding account stats. Implementing these frameworks, 60% win rate with a 2.64 profit factor. Before we get into it, what is today's video objectives? Number one, to understand exactly when to enter. Number two, understand how to avoid bad trades. And finally, to have your first green month in 2026. So let's get into it. Step one is defining direction. Are we bullish, looking for longs, or are we bearish, looking for shorts? Now, to do that, we add the 34 EMA to your chart, and it works super simple. It's the only indicator we're going to use throughout this entire model. If price is trading above the EMA, we're going to look for long continuation trades, and if price is trading below the EMA, we're going to look for short continuation trades. Now, the EMA does not tell us where to enter. It only tells you the direction we're allowed to trade. And today, we're going to be using this on gold, trading the New York session, which starts at 8 a.m. UTC -5, but this model works for crypto, indices, and Forex. Just make sure whichever asset you want to trade, it's within a volatile session. In this example, we're looking at the price chart on the 15-minute time frame. This is going to be your entry time frame. And here at New York Open, we can see we're trading above the EMA. So we are looking for long continuation trades. Now, step two, this requires patience. We're just going to wait for the market to sweep liquidity before continuating in our direction. For reference, liquidity rests above swing highs and below swing lows. And when price runs one of these levels, this is called a liquidity sweep, and they act as pivot points. So if we are bullish, price will be above the EMA, and we're going to want to see a prior swing low get swept to fuel the continuation higher. Now, if we were bearish, it would be the inverse. We'd want to see price sweep a prior lower high to fuel the continuation for shorts. Now, there is a very important distinction between liquidity sweeps. And listen carefully, because this is super important for today's model. A sweep must be structured based. So a bullish liquidity sweep is going to show up as a new lower low, and a bearish liquidity sweep will show up as a new higher high. We are not looking for candle rejections. We are looking for false displacement, where price is taking stops before reversing and setting up the real move. Exactly like this example, price has now closed beneath a previous swing low, making a new lower low, enticing new sellers to enter their positions while stopping out prior buyers. This provides the exact market conditions that we need for a reversal higher. So step three, this is going to be our entry model. Our entry model, the change in the state of delivery, also known as CISD. Now, CISD has two parts. Number one is the liquidity sweep, also known as a manipulation leg. This is where price sweeps liquidity on the swing low or the swing high here. And number two is where we re-break the swing low or swing high origin. That is our manipulation leg, and flips the bias from bearish to bullish or bullish to bearish. So in a bullish sense, price has moved lower, stopping out the previous buyers and tagging in new sellers. Where was the swing low origin? Well, a swing low is consecutive bearish candles that originated here. So we're going to draw a line at the opening price of the swing low. And if price closes above this level, we have now got a change in the state of delivery to the upside, giving us that bullish long signal. Now, in a bearish sense, the opposite is true. Price moves up, forming a swing high that stops out previous sellers and tags in new buyers. Now, the origin of that swing high would be the opening price of that first bullish candle. If price closes beneath the opening price, we have now shifted from a bullish program into a bearish program, giving us that bearish entry signal. So now back to our example, we can see here we are in that bullish program. Price broke beneath a previous swing low, forming our manipulation leg. Where was the manipulation leg origin? Well, it's that swing low opening price. So you draw a line on the bearish candle opening, and once price closes above that, we now have a bullish CISD towards the upsides. And then we can place a instant execution on the candle closure here. Stop loss is going to be underneath the swing low that got stopped out. Your first target is going to be a 1 to 2 risk to reward ratio. So if we risk $1,000, once we're up $2,000, we are going to exit our position and walk away with a very nice profit. And just like that, we have a clean, high probability framework that works in 2026. So before we break down some real chart examples, make sure to hit subscribe so you never miss another video, and it really helps me keep making content like this. So in example number 1, we're looking at the price chart of gold on the 15-minute time frame. The date is the 22nd of September 2025, and our session has just begun. So first question, what is the directional bias? Are we long or short? Well, quite clearly, price is trading above the EMA, meaning we're in long continuation market. Now, we've defined our bias. The next step is to wait for a liquidity sweep in the form of a lower low, since we are bullish. So let's keep pressing play on price. Now the session has opened. We've now closed beneath a up close candle, meaning price is forming a new lower low. This is now sweeping liquidity, and we should perceive it as such. So we're going to keep seeing how price forms here. Okay, we have a movement towards the downside, rejecting the midpoint of the wick, inverting a bearish gap. But our entry trigger in this model is the break above the swing low origin, which is this opening price of that bearish candle. So we're retesting, and now we finally got that breaker structure, giving us a CISD towards the upside. Now, a little bonus for those who actually watch the examples live: when we want a sweep of liquidity, we prefer it to be above the EMA. Now, I saved this nugget from the PowerPoint example because the ones who are truly dedicated to this deserve to know this information, and we're going to save one nugget per video for these examples. So now price has swept liquidity above the EMA. We've broke back above the origin of the manipulation leg. Next step is simply to take a instant execution. Actually, the candle was one behind, so we'll place a stop. This was the entry candle. The trigger is as such. Once it fills us, I'll do the stop loss. Okay. Stop loss is underneath the swing low origin. That is the low that got manipulated. So your stop could be here for $4,000. We'll be targeting a 1 to 2 risk to reward ratio, like such. And now we can press play. We're risking pretty much 5,000 to make 10,000. You can go break even here. You can take partials as we're up a 1 to 1. That's going to be completely discretionary based on your experience. Exactly like we're seeing here, a beautiful winning position. In example number 2, we're looking at gold on the 15-minute time frame. The date is the 30th of July. Now, our first objective is to decipher if we are bullish or bearish. And this was a really complicated day. So I wanted to go with this example. When we see price is range bound, your primary focus is to stay out of the market. We want to see a clear defined bias, and we want the liquidity sweep to either happen above or below the EMA. So we're going to keep pressing play and wait for the range to break. Okay, now we're having a range breaking towards the downside. The next objective is to see price sweep liquidity and displace past the origin. Okay, we want to keep continuing down, and now we've had a displacement higher. So see this down close candle and this up close. Price is now making a new swing high here. If we break beneath the origin of this up close candle, we can get a potential CISD towards the downside, as now we're taking out a prior swing high and sweeping a liquidity, forming that higher high that we need for a bearish continuation. So we're really starting to move higher here, but we finally get the change in the state. We've broke beneath the swing high origin, giving us a valid entry trigger into the market. Stop loss just above the swing high that got stopped out, which would be here, with a target at 1:2 risk to reward ratio. Here we can place the instant execution. Stop loss at the high here, risking 5,000 again to make around 10,000. Just like that, we're filled. Press play on price, almost one candle dropped towards our target here, and one more, we can see we hit that TP. So that is it for today's video. If you have found value, then go ahead and join my free Discord. I share trade ideas, setups, and you have access to me directly. So make sure you hit subscribe, and I see you in the next one.